Hi everybody, Alex Deploy here from Expert Forex, and in today's video I'm going to overview the settings for the tradable RSI automated indicator. I'm going to review these settings one by one, and in a future video we'll look at specific strategies how to use these settings. So on your screen you'll see the first, we've separated the buy and the sell settings for the RSI. You can have different settings for buy transactions and sell transactions, and the first setting in the buy area is the actual period for the RSI. Now at the moment it's set for 14. I prefer the setting of 4, and I'll show you why. Having a setting of 4 picks up the overbought and turning points quite nicely, as you can see on the chart that is displayed at the moment. However, when the RSI is set to 14, you can see it doesn't even go into the overbought and oversold areas, and does therefore not give signals on turning points. So it's something you've got to play around with. It's a balance between sensitivity, whether you want to only pick up the major turning points in the market, or you want to pick up most of the turning points. As I say, my preference is a setting of 4, as that seems to pick up most turning points in the market. The next setting is the entry method. How do you want to enter the buy transaction? There are 3 choices, and you need to go into the drop down menu, and the first one is turned off. In other words, if you don't want to enter buy transactions, you turn that selection off. Then there are 2 other methods of entering. The one is upward crossover below to above, or downward crossover above to below, and I'll explain those 2. When using the above to below method, you would enter when the indicator comes down from the top, crosses over the oversold line, and closes below the oversold line for the first time. Then you would activate a buy then. When using the below to above method, it means the indicator has to cross over the oversold line, turn around, and then go over the oversold line again. So the entry would need the indicator to have gone over and crossed over, and then you would activate the buy on the close of the candle if the indicator finishes above the oversold line. So those are the 2 differences, and I'll show you quickly on a chart what those 2 differences look like. On your chart you will see a nice downward trend. The indicator comes from above and crosses the oversold line from above to below, and if using that method, you would enter on the close of the candle when that happens, and that's where this line is right now, and you enter on the close of that particular candle. So I'll mark that on the chart for us. The next method is the below to above method, where the price then moves up and crosses the oversold line from below and closes above the oversold line, and that is where my line is right now, and therefore you would enter on the close of that particular candle. Some traders like to enter early, and other traders like to enter late. On the chart there's also a sell example where the price went over the overbought line, and if you were using the below to above method there, you would enter on the close of that candle. Quite a nice entry. However, if you decided to enter on the above to below method, your entry would be on the red candle, and it would be right at the bottom here. So there's quite a big, there are pros and cons for whether to enter early or to enter late, and the EA gives you those options. The next setting is the overbought and oversold levels for the buy entry, which is called the RSI Entry Levels, which the trader can use these to establish the oversold line where decisions need to take place. And I've drawn on this chart a few lines for us to look at, and it's a case of sensitivity. The Further down the line, the fewer turning points you're going to have, and therefore you will miss a few transactions, and the closer and the higher the line, the more turning points you will experience. For instance, those 2 turning points that occurred there would have been missed if you had set your setting for 20. So the 30 setting happens to catch more transactions. So again, there's a balance between the sensitivity of catching lots of transactions or the sensitivity of catching fewer transactions, which possibly have a higher chance of success. Now, there are about 4 exit methods, and one of the exit methods you can use is exactly the same method as entering. So you can also tell the EA when you want to exit. So let's say you've entered a buy over there. You can say that you want to exit when the RSI crosses the, let's say, 70 or 80 line from below. Or you can say you want to wait until it actually turns around and comes back and crosses from above to below. So again, you have the same setting that you can set for exits. And the drop-down menu gives you those settings. It's got turned off, so if you want to turn that method of exiting off, you can do that and rather use targets or stops or a following stop or a break-even stop to exit. So you have got alternatives, but certainly if you want to use the upward crossover or the downward crossover, there you have those methods. Now the same applies to the sell settings, so I won't repeat those. The next setting is the direction of trade setting. So for instance, once you've set your system up and you are generating losses the whole time, that might not be a bad thing, because this setting allows you to change the direction of your entries. So in other words, if your buy entries are resulting in lots of losses, you just change the direction and turn it into sell entries, and hopefully that will give you more success. The maximum spread entry is an easy one. If you don't want to trade if the spreads are too high. For instance, if you're trading the euro, you might only want to trade if the euro spreads are below 2 pips, and you then can set that setting. It will not enter trades if the spread has been increased by the broker. The EA allows you to set maximums for the number of open trades, so you can set as many open trades as you want. In the beginning, it might be good to just use 2 to start off with. The next setting is about position sizing, and you can choose 4 methods to position size. You can use a percentage of your account as the free margin, percentage of your account as equity, or the percentage of your account as a balance, or you can set manual lots. So you select which method you want to use and click that. If you're using a percentage of the account, you can then put in your percentage that you want to risk for every trade. If you're using the manual method, you then enter the manual size of the lots that you want to trade. If you want to use a take profit or initial stop loss rather than exiting in other ways, this is where you do the setting. So you would set your stop loss here and your take profit over there. If you set these to 0, they won't work, and you might want to exit using other methods. It's always good to have a stop in place and sometimes a target, even if it's quite a big one. So you can do your target setting and your stop losses right there. Next setting allows you to decide what kind of loss management you want to use, and the drop down here says either set initial stop loss only, so you'll only use your initial stop loss to control your losses, or it says move the stop loss to break even, so when the transaction reaches a certain profit level you can move it to break even, or you can use a trailing stop, and the settings for those are follow. The move the stop loss to break even, so in this particular case, if the profit is 10 pips up, it will move the stop to break even, and you have a risk-free transaction from then on. If you want to use the trailing stop, you can say start the trailing stop when the profit is, in this case, 5. Your trailing stop will then be, in this case, 25 pips, and it will adjust every 2 pips. So as the transaction goes up 2 pips, the trailing stop will follow by 2 pips with a gap of 25. So that's how those particular settings work. Very flexible trailing stop settings. The next settings are easy. They're basically the day of the week or the time of day. So you can select the days that you want to trade, and also the times within days that you want to trade. So for instance, if you want to only trade the US market, you can set that up. When using the time of day, you have 3 selections that you can use. You can either use the broker server time, which is aligns your trading then with the charts that you're looking at. So you can use your broker time, or you can use your local time, your actual PC's time, to control the times that you're going to trade, or you can use GMT. So there's 3 selections that you can make. You don't need to do too many calculations. You can, if you choose the broker time, you basically will get what you see on the charts. That's probably the most popular one. The user manual goes into a lot more detail on these particular settings. If you want to use the GMT offset, there's a drop-down menu which allows you to look at what the GMT offset is for a lot of major markets. And then you simply enter the hour of the day you want to start trading and the minute of the day. So you could, let's say 9:30, you put in 9:30 when the financial markets open, and let's say they close at 4 o'clock in the afternoon, so 1600 would be perfect. So that would cover the financial market if you are, for instance, located in London. You can then also choose which days you want to trade. Some traders experience Fridays as bad days to trade, and you can therefore disable the particular days. So those are the settings of the tradable RSI. It provides a lot of opportunity to create strategies, and we'll go through the actual strategies in the next video. For me, Alex Abroy, thank you for watching this video, and we'll move on to the strategies next.